Let's get down to the New York Stock Exchange. Check in with Jim Cramer this morning. Jim, it's Friday. We've had a big week with the banks. We just got Goldman Sachs. Tell me, what do you think after this big roundup of all of them?
What I think is I was a moron to leave Goldman Sachs. I should never have left. I mean, the money, it's not really pop. I mean, they're like, the whole countries will never make what they're making. Dave and I were talking during the break. I mean, we're talking about, what, 20 billion? It is just extraordinary. And what's happening in this period, Becky, is that it's not that they're beating the numbers, these banks. You take like Bank of America. The numbers have the estimates have nothing to do with what the companies are reporting. Because all anyone was talking about was the yield curve. And it meant nothing. The fees are out of control. And I think that people have to recognize, whether it be Morgan Stanley, whether it be Bank of America, whether it be Goldman Sachs, these are sticky fees, and we got to stop thinking about these companies as deserving of low-priced earnings multiples.
All right, that's what I was going to ask you. They're sticky fees. That's the key. These things last?
They're sticky. These are not episodic numbers. It's entirely possible that there's just a new level of the way companies make money in this business. Now, I know we do have this halcyon moment for M&A, and I mean, M&A was big, but the asset management is just gigantic. A lot of us, look, the market went up. The bears don't understand that it's a self-fulfilling prophecy. When the market goes up, the rich get richer, and a lot of Goldman customers richer. But you know what also managed to be good? The Apple Card. The Apple Card, $7 million. They're not losing the money that everybody told me they're going to lose. It's a great start, I think, to a credit card that's going to matter. So there's a lot, it's not buy now, pay later. It happens to be Apple. So I really loved this quarter, Becky. I loved it.
Hey, Jim, Bitcoin.
Andrew.
Bitcoin. Flirting with 60,000, over 60,000 for a moment. We have this news report that we could see a ETF around Bitcoin futures next week. What do you think?
Four ETFs, good liquidity. Younger people at Robinhood running ahead of it, thinking that when the ETFs are announced, that's going to bring real money in, new money in from like the JP Morgan kind of customers. So why not run ahead and then dump it on them? So there's a possibility a lot of people feel, and I deal with, that you could get a short-term peak or maybe a real peak as people just run ahead of the ETFs. So I think we have to watch that. It is a known thing that the day that the ETF is announced that we've had historically, that is the top. So let's stay on that.
So you're not calling for a straight shot to 100,000 then?
No, I'm not. As a matter of fact, I may cash out half my Ethereum. I'm really thinking about doing it.
Yeah.
I know. I just have.
And it's not that you don't love Ethereum.
Look, I know Mike Novogratz will probably be mad at me, but and I like him very much, but I can't do my job based on that. Mike Novogratz might be mad at me.
Yeah. Hey, Jim, I just got to give you a shout out. I got to give you a shout out for being such a good hardcore fan. You went all the way down, saw the game last night in Philly, and even after kind of not loving it, thinking it was a nightmare, you're still saying you got to own them. You don't trade the Phillies. You own them.
Yeah, Howie Roseman. I mean, there was a Boeing moment. I mean, it was a Disney moment for a couple of quarters, but then it became very Boeing.
I'm with you. I'm with you. My family's heart's with you.
You have to analyze games. Like, there's like a whole Boeing period where there was 3 and out, 3 and out, 3 and out. And then there's these Hertz drives, and that's Disney and a little Apple. But then we reverted to Boeing at the end.
Oh, sad story, Boeing. I'm sure you guys will be talking about that in just a few minutes, too. Jim, great to see you.
Oh, absolutely.
Thank you.
Absolutely. Thank you.